Okay. So again, first, again, I know now you mentioned that some were option trades. So like seeing the 70% loss, I'm going to focus more so on just the equity side and focusing more on those actual bigger losers. For your own, has it been the stock side that's been the issue, or has it been the option side, just from like trying to mitigate?
Probably stock. I mean, like I don't really trade options too often unless I think I see a good opportunity. Then I'll, and it's got to be the right stock for me as far as like an option. I'm not going to just trade monthlies or something like that. I rather like with Tesla, if I could see, because Tesla's just a beast and will just do whatever it wants to do, and I'll trade like weeklies on that, which they go up crazy amounts. And like I said, I'm not going to buy something that's a crazy percentage of my account. I'm only going to risk 1 to 2%. But for the most part, I think what my issue is maybe like maybe I'm not collecting profits at the right time, because like a lot of these stocks that I bought is like the most recent losers were winners. Like Kim was a winner, but I wasn't up like a crazy percentage, so I didn't really lock in profits like I should have, because then I moved my stop loss up to break even, and you could see I only lost $1 on the trade. And Costco was being, or no, Cisco. THC I think was a winner. QCOM wasn't that good of a trade. And I moved my stop up and I lost. I at first was risking around $100 and I only lost about $50. Like I understand that, your portfolio doesn't go straight up. It's up, down, but you just want more winners than losers, or you want your winners to be bigger than your losers.
Yeah. So I'm just kind of scrolling this. So I'm just,
in 2020, I did a lot of options because I was at home and I was just like trying to day trade, which I found out the hard way is not for me.
Yeah. So just looking at some of these, there's like 3 big things with the options that I think immediately, and it's not glaring, it's just like I see a couple. So it's like XLF, and like a lot of SPY options, like trading the broad market or a broad sector with an option is like, I don't want to say it's very foolish, but it's like a waste of time. You're going to options for leverage. You're going to options for volatility. You're going there to, I don't want to say gamble, but you're going there looking
like a lotto.
It's like you're almost like going to like a strip club and they're looking for a wife, buying like XLF or the SPY. Like it's just, you're not in the right environment to do that, and it's just like you're never going to get 1,000% on an XLF option. You're never going to get 1,000% on a SPY option unless you buy, the bottom
crazy out of the monies,
and we get that crazy 10-day. Like that's going to be the Hail Mary of those trades where it's I'm not going to get it. And same with Ford. Like Ford is just a super cheap stock. No matter what Ford does in the next week or two, or whatever the time frame is, it's not going to move anywhere significantly to like make that option worth it. So like that off the bat, if you are going to, trade with options, the SPY, like if your best idea is a SPY option, you have no idea, you have no good ideas. It should immediately be a red flag that I should step away from the computer, and whatever I was going to risk on this option, I should just go spend that money doing anything else. Take the wife out to lunch, fucking donate it, like just do anything other than that's the best idea. So I think, again, I saw some good, like you had some big winners, some 100% losers, but again, they're de minimis, like you lost $40 for it. It's not the end of the world. But like the Ford, the XLF, and the SPY, those options, those should just be like
SPXs.
Yeah, like they're just you're never gonna get like the crazy risk reward. Where like in a name like Tesla, like I get it, because you're gonna get, the name is gonna move, and that's what you want in the option anyways. And if you can turn $100 into 1,000, that's fine. It's just we don't want the other $100 to turn into 0 9 times in a row.
Right, exactly. Okay.
You mentioned, let me see if I can find Kim. All right, so Kim. So again, that was just kind of the option. So we won't spend a lot of time on that. So again, you know, he broke even, he didn't lose money. I think that's okay. That's not a big deal. If you bought 20, you bought this and then you were like selling here, that would be more of like, why are you that hopeful? Where like I guess
Right.
I break even for me with like CIVI. I was doing like a review yesterday with one of the members and he made money. Like he took profits day one. He was like selling, like he took profits up like 63-ish and then he like got stopped out break even. So he made money overall where I completely got stopped out break even. So, but like for me, I have no problem putting risk on, being right in the trade and then getting out break even. I have the problem with being right in the trade and then losing money. That we want to avoid. And that seems like if there's some of these trades that were working and then they became losers, it's just moving that back to break even. Where if it's, we're buying these short-term swing trading setups, we're not holding them for months and years or giving them a crazy amount of room. And the more we look at these failed trades, it's like the sooner we could have gotten out, probably the better. So even here, like if I was trading it, kind of the same thing. You bought, the Atlas verse like this 24 half, kind of where you bought. It tickles at that day, kind of tickles at that day, and then you get pushed out kind of below low day break even. So there's really nothing much here. You up for it, I should have sold some day one or things like that.
Right.
Nothing really glaring here. I think it just was a trade that worked and it just, didn't happen. This is more so when it does start to come back to your price, though, that just like that, again, like that flag, like red flag, like it's coming back to our price. The sooner we get out of this thing, probably the better. And I think you did it fine. Like I think you gave it enough time. You let it kind of shake out those 2 days that if it was going to turn back up, you could have had your stop. Really, like if this day was different and it, was little inside day and the next day was inside day and up, we would have had like a very strong stop, and then more likely the stock would have continued to drift higher. So it's just that day was really the day to get out, and I don't see.
I think that what happened was, so like I bought on that first day. It gave the stock some room because I can't watch the market all day, so it's mainly I give myself wide stops, and then the fact that the whole market kind of took a dump.
Mm-hmm.
I think that's what happened. And it just, that's why I moved my stock up to break even, or my stop up to break even, because of the market was just performing poorly all overall.
Yeah. I think this day, and this was, I was doing the review with the member Gabriel yesterday, and he was in CIVI. And it was like, this is kind of one of those days where, again, we're very good buyers. It's very easy to buy the options, very easy to buy the stock, very hard to sell it. And even on my end, that is like a weakness of mine where I'm always getting stopped out. I don't mind it. I keep my losses very, very small, as close to break even as possible. But I also don't take profits a lot when I should. And that's something that I have to work on. And that's something where, if you had 100 shares, you don't have to sell 100 shares this day. You don't have to sell 50. But even getting in the habit of selling, wherever you're risking, a buck here, it goes $1 in your favor. So it's kind of 1-to-1. All right, I'm going to take 10% off. Like just to get in the habit of trying to sell. And that's where more so just like key like resistance areas. It's just like you can throw those limit orders out. And even for myself, like with the UK recently, this was a name I bought up through 108. I was expecting kind of a $4 breakout. This was like a $4 flag, 104 to 108. I should expect at least a $4 breakout in the short term. And that would send it to 112. So this day, when it gets, every day it just grinds higher. My initial stop is here. By this day, bullish engulfing, my stop is basically break even after this day. Next day's higher. Okay, by end of day, I raise it again. Next day trades higher, closes, bullish engulfing. Okay, I raise it again. And now this day, it finally reaches my target. And now I don't want to prematurely just get rid of it because, at this point it looks amazing. It just keeps grinding higher. But if my target's 112, and I know I'm not that good at taking profits into the up moves, now let me be a little bit more defensive. So I'll raise my stop to low a day. And now if I do get stopped out, I still made, 3 of the $4 I was aiming for. And that happened. And of course, now it looks even more amazing. And, maybe I feel silly that I did get rid of it, but I made money, very easy 4-day trade like you. I wasn't watching it constantly. I checked in it once a day and raised the stop, made some money and kind of on to the next thing. But I think like with this Kim and like my CIBI was, you know, having some limit sell orders or having some alerts. Like I've been using, I don't know if you're aware of this, but on Trading View, you can add alerts on,
Yeah.
at least for me, I put these horizontal lines. So like I had an alert up here at 112 and it was like, I always put like take profits, you idiot. And like the alert popped up. And when I saw that, it looked amazing. And I'm like, let me go raise the stop now versus like first that low a day. So if it wants to roll over, I'll get out. If it wants to continue higher, you know, I'll be content with it.
So you were looking for a 1-to-1 on that trade.
No, so it's not, so I'm like, initially, I'm always going to give it like the proper room, but I'm going to pretty much as quickly as possible, I'm going to raise my stop to break even. Like this was just before the day trigger, before like I was planning to enter this trade or before it triggered, that's where my stop was going to be placed. You know, this day it gets triggered. I get triggered in this day. Okay, I throw my stop in right here. You know, starts to trigger. You know, next day I move it up, and then by the close of this day, my stop's basically break even. So I'm never really keeping the stop here that long. Where like I know in the beginning of the trade, my risk is at really at 4%, but I'm pretty much as quickly as possible getting it to break even and then letting the trade kind of
Yeah, take the risk off. Okay.
So that's what again. So like I'm expecting like a $4 move. It's hard. I can't be like, all right, I'm risking $4 now. I need to, you know, sell this at, you know, 125, which it probably does go there in time, but this is just kind of like a shorter term setup. That's
Right. Okay.
You
I
mentioned.
think that makes sense. I mean, obviously, you know, the stock's not going to go up forever and it's going to have some kind of pullback.
Yeah.
I'm trying to look at, so like what was frustrating for me, hold on, I really like this trader sync. This thing's
It's I use the free version forever, and I do monthly recaps with the mentors and like everyone like on the trading experts like staff side and people that's like, let's see. And there's just like one conversation with Heaven where he's like, he was showing me his trader sync. And I forget what he just mentioned how he like imports the trades. And I was like, and then I was like, what? And then he showed me and I'm like, oh my God, I've been doing this manually for 2 years.
Yeah.
Wasting God knows how many hours, like keying in, buy this date, this price, this amount of shares. So like where you export the document once, you upload it, and it's all there for you. And it's like, oh, why the hell did I not pay for this?
And you can still like I like to write down things, which I just found out this morning. You can actually journal with each stock.
Mm-hmm.
For me, like, I think what was frustrating for me was like, I guess 2 weeks ago-ish, it was like, I was up probably like $1,000 between all my stocks, and then the market started to take a dump.
Mm-hmm.
And then I was down like $800 just like that. And I was like, what the fuck did I do wrong that, you know, I was up so much? And it's like, obviously I'm not taking profits just at the correct time. So I think what we're going to start doing is like, as I go up percentages, maybe like 1% start to just take off, you know, a third or a fourth of my, and just
even like a share, as de minimis as that sounds, it's just a bit like work on that, you know,
get in the habit of collecting profits.
Where it's because you every time, even I feel the same, like you spend the time and mental effort of getting the position and you don't want to get rid of it. And sometimes having, you know, okay, my 2-to-1 is here, and I'm going to have a limit sell order for one share. My 3-to-1 is here. My 4-to-1 is here. And for how you trade individually, you'll start to figure out like where you're, like realistically how far you're going to get in a name before it's going to start to turn. And then you can start looking. So that's where like with me with like when I use M1, I'm waiting at least for like a 50% return in the name before I look to rebalance it. Where for a newer person, they might not have the patience to wait that long. Where like at 10% they want to do something, and I get that because it's like, all right, we'll do it at 10, and now you're comfortable at 10%, like rebalancing there. Okay, well the next time wait to 15%, and it gets there, and then wait to 20, and so you're like working your way up. So this is kind of like the same thing on like a shorter time frame where we're always looking to make 10 or 20, 30%, but a lot of trades aren't, and a lot of these trades where they do work, for me, it's just like minimizing loss as much as possible. So like I'm looking at your THC.
Yeah, it was actually a good trade.
Yeah, like you bought. So this is like a perfect one where again you didn't lose like a dollar amount that was crazy, but you lost 2.5%. Where this should have been, you bought this day, looked great. This day is the sign that probably not so much. And this would have been for me break even stop. This day opens like shit. You're stopped out, and even properly like lower day is basically $90. You pretty much bought 90, so you pretty much break even. You're out at 90. You lost nothing in this trade.
Again, yeah, the volume even. Well,
but anyway, that's like these. And again, when I've done these reviews, the first month it's usually like very inconsistent, very erratic. Even right now, it's like ditch the fucking forward options, ditch the SPY, ditch the XLF. Focus on the crazy stocks for options, and you know what you're doing there. And for this, it's like this was a loss that could have been a break even. Next month, let's make sure this is a break even. And as we start looking at a lot more of these trades, that's going to kind of be a recurring theme that clearly the trade went to your price and below it because that's why it's a failed trade. And the more that we can make these break even, the less of an annoyance these start to feel. Because now if you have 10 of these trades that are break even, you don't care. Like for me with CIVI, if this thing pulls back in under 60 and sets back up, which at this point it's not looking to be the case, but again, this is kind of like the new range in the name, that I have no problem. Let me get rid of this. I have no problem getting back into this name with the same position I had before if I find a setup in it, because I lost nothing in it. But if I bought 60 and then I sold it at 52 and I lost 10%, like I would not have that same conviction to like want to get back involved. So
yeah, THC, JBHT, I was just looking at, actually wasn't, I really saved myself on that. I mean, I just read this book. Well, I didn't finish it yet, but it's called Volume Analysis, Volume Price Analysis by Anna Coling.
Okay.
And it has you really studying like volume as far as like giving you the conviction. So yeah, I bought on, like you could see, I bought on the 29th there. And then the next day, the volume was higher and we stopped out. What is that? QCOM?
Yeah.
I was kind of pissed I entered that trade.
Yeah. We're at the JBHT next. But this was the same thing. So this one lost 5%. The data we kind of got in was already kind of a red flag. Because again, if we were expecting a breakout, this did not close that good. This is like to expect, that continuation next day is very difficult to expect that. And this is again, same thing.
Hanging man.
It's hard to, I can't say you all you do break even, like that would be unrealistic. You really have to give this versus that low. But same thing, there was no reason to give this name to this spot. Like this, so this is where you wanted to trade it perfectly. You're like, I want to respect my game plan. I want to give versus the proper pivot, but this is not the time to do so. The time to respect the pivot is like when the name's actually working immediately. But that's when you want to do the opposite. That's when you don't want to give it room and you want to take the profits because it's working. And that's kind of the thing that this should have been, verse one under 156, you should have been out that day. This should have been a 2% loss instead of 5%.
Yeah.
No, because you were never right. You were right for a dollar. So you were up a dollar, but you lost 10 or you lost 8. That we can't, that's like, you can't have that. And that's like where I see like the option stuff where it's for most people, it's, I made 100% this one time, or I made 1,000% this one time, but like, okay, let's remove your best winner and your best loser. Now let's look at the average. Okay, your best winner is a 50% gain and your average is an 80% loss. You will, the person's never going to make money. It's impossible. So this is the same thing where when you are expecting something and you don't get that follow through, and you were like willing to risk $10 or $8, and you only got $1 in your favor. These are ones where it's like you can just kind of more quickly bail on them. And I've had trades like that where I'm expecting like this big breakout, and it goes $1 above my price, and it comes back, and it's like I'm just going to get out of this fucking thing. Like I'm clearly not looking at it the right way.
That's exactly the mentality I had too. Was like, all right, I'm going to stick to my game plan here, give it the proper movement. But you're right. I mean, as you can see, it was kind of a reversal candle, right? The dead man hanging
Yeah.
on the stock the day that I entered, and then
Yeah. Even just
the volume was red.
even like this is an H pattern. Like this, like
True.
names getting smoked, it bounces like these like relief bounces. Like these are like those kind of H, like again, it's super easy, but this is not like that. This is not like a strong flag where like if this was in like if this thing was trending higher and then we have that consolidation, it's a much different area of consolidation than like this kind of relief bounce. And now it's like, you know, kind of ready to age over. But again, that's just, this is more one where it's immediately not working in your favor. It's immediately looking like shit. Sticking to the game plan and giving it the proper room is more likely not going to be the case. You want to stick with the game. Yeah. It's immediately working in your favor. That's when you want to be a stickler for the game plan, not when it's fuck. In my gut, I know I'm wrong, but I want to be consistent and
I think what I'm going to do from now on is like the days that I enter, because I always at the end of the day when I get home from work, I'll go on the computer and just like look over the overall market and see where I entered. And I think from now on, what I'm going to do is the days that I entered, just going to really pay attention to how the market closed that day and the stock closed that day. And then if it's shitty, move my stock up to break even.
Just focus on just the stock. Just keep it very simple, because again, when you start adding too many things in, it's going to be very hard to be consistent. If the stock closes strong, great. If the stock closes like shit, that's very simple, because some stocks,
red flag.
Yeah, just like if the stock's closing like shit, that's all you need to know. You don't need to add in, what's the market doing, what's the 10-year. It's like it's going to be too much to do consistently. You might do it for a week, but you're not going to do it with every stock every day for a year. We want to do things that are repeatable. This JBHT, again, really nothing here. Maybe you kind of were like hoping this was like low. I'm not sure what the setup was. Was this kind of like you're trying to like sneaky buyback like through this like 210?
Right. It was like more of like a coming to test that support and looking for a bounce. But
that's just a tough trade. Anytime when you're seeing 1, 2, 3, 4, 5, 6, 7 days down, 7 days kind of like indecision-y, like this, if you were buying up through this day, like we can see, if you can obviously see the line. So it's like 210 up through 210 the first time, that was like the move. Like if you were buying it today, even though like you would technically be like pretty late buying this thing $10 off the low, like this entry makes so much more sense. This name hasn't broken 210 ever, or in a very long time. It's been a clear level of resistance. You're talking about reading this book on volume, it has tremendous volume, like looks phenomenal, like everything about that breakout looks great. And then it's like, this is like CIVI now. Like I'm not fucking around with this, because this is just chop. This is like, there's nothing here. There's nothing for me to buy 60 on this day. This is just chop. There's nothing in here that's like significant to me. And that's kind of like this, where there's just nothing here. And I get like it's like a shot, but this is one that this is a no trade. Like this is just purely an avoid. But again, you got out kind of the right spot. But even this, if you were expecting that to be the low, you buy this day, and then you got, this day you get no follow through, next day no follow through. It's like, the writing is kind of on the wall. Very rarely you're going to buy a stock that's going to trade down for 2 days and then like magically start ripping again. So again, this isn't like a crazy percentage loss. This is just probably one that didn't need to be put on to begin with. Let's see. But yeah, a lot of like the trading losses aren't that big. Usually the first time you do this, it's like there's 5% loss, 6% losses. Like it seems for the most part, a lot of these are pretty tight. Let's see, figs, 6%. Okay. This was October 25th. All right, so you're buying up to this base. Didn't work. Again, this is same thing with just tightening up. Bought this day, doesn't close the best, but I know the base you're looking at. Definitely get the entry. This could have been one under 37, and you lose a buck. You know, because if it takes out that low, like if it takes out your low a day, the prior low a day is insignificant, is not really relevant. It's not like this trade's gonna, you know, tick a low a day and then like, you know, magically turn back up. Like it had to get slow before it obviously goes. And you know, your book on volume is difficult as this spot. And this is like the hard part is like you lose money in it and then like it just goes, imagine that had to be earnings. Yeah. No, it wasn't. No, it wasn't. But it's just tough when obviously a week later the stock.
Yeah, tough trade.
Yeah. And these are sometimes ones where it's like, if you, and it's not to say that if you had a tighter stop, you would have been willing to buy 38, because even if you really bought 38 this day, like that would have been insane to just kind of blindly trade.
Yeah.
That's like a hard, you know, but that is a part of trading where if it is a name you're watching and you don't catch it the first time, sometimes it takes 2, 3, 4 attempts to finally catch it. And that's why the more we can initially tighten up those ones, the trades when they don't work, we'll have more conviction going back where, you know, if you lost 5% of this, 6%, like I wouldn't be rushing to get back in this name either. But if you lost, you know, a buck in it, you lost, you know, 3%, you might have a little bit more. You're not saying you would have caught this because there really was nothing here other than it had to be some type of news this day for that.
Yeah. Plus, there's no risk management on that candle.
No, that's I'm just saying, like that's more like the annoying part. Like you buy it, you lose money, you expect this big move, and then like 4 days later, you're like, oh god damn. But
yeah, right.
We're looking at so far, you know, for THC, QCOM, and Figs, JBHT. Kim was good. THC, QCOM, JBHT, and Figs. All of these trades, had they been the low of day on the entry, or the name was not working immediately, looking for the exit, these all would have been, you know, 1 to 2% losses instead of 3 to 5% losses. And that's kind of like the focus going into the month ahead, because you have some like this UPS is basically break even, and this is perfect. Yeah, you bought with the trend, you got some follow through, it didn't work, you got to break even. Who cares? You know, it's nothing. It cost you a couple bucks, and you have no problem, you know. And looking at it now, definitely super pumped that you got out.
KR just sorry. I should probably sell some of my KR. Just gapped up huge.
Yeah, that is I'd be selling more than a little bit.
So we got here. This is fucking, I can't see a goddamn thing. I'm outside right now.
Yeah, I see you like squinting in the shade. And I have like a shipping box on my window because it just, I have like the crazy.
Yeah, you need some blinds, it looks like.
Yeah.
All right. I'm just gonna sell some of this real quick.
And by this, given this gap up, it's like, you know, give it a little bit and get like a lower day stop, because this is another one where like if this wants to continue higher, amazing, but if it's going to take out this, you know, that low, it's going to want to fill that gap. And you know, if you bought 56 or 57, 58, this is a good time to lock it in.
Yeah. Let me move my stock up. All right, so yeah, that definitely helps. I'm gonna really start paying attention to as far as so you KR. I'm gonna move it up to. I just sold I'm gonna move it up to right below 60, I think. The rest of my shares. That'll give me a bunch of room. So I want to ask you, the watch sales, they like, I mean, those watch sales, it's fucked me a few times. Like I'll get into a stock and it'll work against me. I'll stop out. And then once it's going in my favor and I re-enter, next thing I know, my average cost is like above where the stock is even trading at.
Yeah.
That's just kind of part of the game, I guess, right? There's no way to like.
I'm not as active in individual names where like I'm buying them and then very quickly kind of getting back into them. And I know this is a much bigger issue. I know with Shay because he's way more active. So like his watch sales are, pretty significant each year. That's just kind of the nature of the business. For me, it's like not as relevant for how I trade because I'm much more like I'm like the slowest turtle, compared to most. But that's just something that you have to just be aware of. And a lot of times with most names, like if you're getting stopped out, like for me, if I get stopped out of a name, I'm pretty much not going to touch it for like a week or two, which is not going to even really matter with the washout because it's going to be the next 30 days anyways. But I'm not really trying to like if I'm trying to buy a name, I'm getting stopped out. Very rarely am I trying to get back in it like the next day. And there will be those times where it's like you do get stopped out the next day, it does go. But that's going to be, again, those like those rare occasions. And when you do get the washout, I know it's annoying because you see the share price increase. You're like, what the hell? I didn't buy it $2 higher than where it's at now. But that is what it is.
It's part of the game.
I'm looking at box trades, so I'm kind of shifting more again. We've gone over enough of not bad trades, but just failed trades, and we know just the overall theme of, if it's not working or we're willing to risk it $10 and it goes $1 in our favor, like the sooner we can get out close to our price or close to that relevant low day, in all these examples, it'll be more cost effective.
That's what I'm going to start doing for sure.
And then again, the big thing with a lot of reviews on my end, because the winning trades, like you're going to trade well anyways. It's the losing ones. The more that we can make those like less painful, the easier it becomes. And like for me, we can go through like 100 of my trades and it's going to be the same boring trade. I bought on the way up, I got stopped at break even. I bought on the way up, I got to break even. I bought on the way up, lost 1%. And it's going to be that like over and over again. There's no like, it's the same story basically for every failed trade, except for, and there's going to be the outlier that, so secondary came out or I forgot to put the stop in on earnings, then I'll figure that out. But from a big majority of them, it's always that same story. And that's kind of the goal when I do these with you and with other members, is trying to move those losing trades to the same story of I bought here, I got out here, break even, 1% loss, on to the next. And just makes it just much easier. And then the ones that do work, like this box trade, like you traded it perfectly. You bought up, you had, your stop was probably under 25, took profits near high day, took profits into the move, took profits, got stopped out. Like this is nothing for me to do here. It's like you did this perfect. There's nothing else, to do differently here. And that's where like the winning trade just kind of take care of themselves. And those are always, the ones we want to focus on. But the losing ones are where you're going to make the big difference because you're going to start nixing out, those 4 of those trades where it's $50 loss, $50 loss, $50 loss, $200 in losses, and you made 200, you're even.
All right.
Forward, if those 4 trades are $10 loss, $1 loss, $20 loss, and then you get this one, well, now you're up 160 or up 170, and you're and that's when that account starts to not just increase on a 45, but it can plateau, and then it starts to kind of inch up with the savings. So that's like the overall kind of goal. And again, a lot of these losses, none of them are really crazy. There's no like, whoa, what the hell happened here? Everything seems like pretty in line, and it just tightening up the downside. Let's see. Excellent. Yes, I mean, seemingly buying on the way up. Probably had a stop for 76. I would imagine at some point in here, you probably had break even, took profits, amazing kick up here, you know, got out the rest end of the day, avoided the chop. And that's like with a lot of these things, we get these big moves. This is often a time when people get like kind of stubborn with it and they want to hold it forever. And then you get stuck in this stuff. And this again, same, I feel like I'm broken record, like CIVI, it's like you get this one big day. And now for the members that are still in it, it's like the hope of just like selling it at 65. Like I need to sell it up here. And it's like, yeah, but you can get 63, 64. Like you can hope for this all you want. But where the hell's the little circle thing? But you can hope to sell up here, but you keep getting these opportunities to sell it up here. Just take the 5 or 8% that you can get up here. So I think you did really good here. That you need to think about the time of being in the name. 1, 2, 3, 4, 5 days you were in this, and you caught the whole meat of the move. Yeah, sure, you could still be in this name, but you would still be selling in the same spot while having to deal with all this kind of nonsense. And that's kind of what we just focus, take the up move for what you can get and move on to the next, right? Generon was a really great trade. That one I already know you traded it. Yeah, same thing. Amazing trade. You bought, stop for 600. And even in here, like this, all these days, like it made sense giving it the proper room because it's just clearly there's buyers there. It's not like you bought it like this day and you're like, let me give it first this area. It's like you bought it on a day where there's more buyers, same the next day, same the next day, same the next day. Or like this all makes sense why your stop is probably over 600. Sold it, into the retest, so it's a break back down. Again, you caught the whole meat of the move. And yeah, sure, it's trading higher now. Maybe you had the stop for 660, but you caught the meat of the move and you didn't have to spend 2 weeks to sell it, $10 higher now than where you were selling it 2 weeks ago.
Yeah, for the chop.
Yeah, and again, it's always, maybe you keep a little bit, like in some of these winners, you keep like a share versus break even in some of the bigger winners percentage wise, just to see. But that's again things you just learn like with time. But again, I don't think you could have traded this, any better. Let's see.
Cool.
Yeah, so looking at a lot of these names, like we're talking about like 2 to 1, 3 to 1, it seems like you're kind of in, like your winning to losing range is -5% to best case up 10%. That's like your, like if you say, remember I was doing it with, his was like he shouldn't have been trading because he was like still in the challenge. And I'm like, we shouldn't be doing this right now, but he was trading, so we had to go through it. And like his relative range was 20% loss to 20% gain. So he had this 40% range. It was like,
wow,
same thing. It was the loss was the bigger part. Like all those trades need to be tightened up to most 5% and then still keep the upside. Where you're in a much tighter spot where it's 5% to 10, and now it's we want to move the 5% closer to like 1 to 2 on the downside, and then stretch out the upside to 10 to 20%. And again, you're not going to get 20% every single trade, but if you can now in the bigger winners, the 8% winners, the 9% winners, those ones, okay, maybe I'll keep one share back to my price. And I'm not going to overly watch it. I'm going to give it time and I'm going to let it do its thing. And that last share, either I get stopped up break even, or I need to make 20%, or I need to make 30%, whatever that number is. And with one share, you're not going to care. It's not going to be this like crazy fluctuation in your P&L. But yeah, so this one, kind of that same thing. This is like we're near 10% of a gain. So again, you bought in a great spot. This is only one that I would say next time. And these are things it's hard to do is to add back to your name back at your price or higher. It's very easy to dollar cost average lower, which is something we never really want to do. But this is a really good example of where this was a very defined level through 24. We can see, 1, 2, 3, 5, multiple attempts where you got in very tight and you gave it the right room. But right here, like, was your stop under 22?
Does it say how many shares I bought? Because I usually
bought 150, average cost 25.
So
by 100.
I had 150 shares. Oh, that might be plus where I added though. I think I did 100. So I probably gave it around $1, or unless I did 50.
It says you bought 100 on October 13th at 23.
Oh, there you go. Okay, 100.
Then
So that would be $1 stop usually. 25 versus 24.
All right. So this, I chart wise, I like it. Risk reward. And this is why I personally hate the cheaper names, because if you're buying 23 here, you're giving it versus 22. I get it's 5%. It's not a big deal. But this is where it's okay. You're risking 5% to make 10. When it really worked, it's kind of 2 to 1. And this is like remember I was talking about yesterday, he was looking at like some REIT names, and the REIT name he was looking at, I can't remember, SLG. Yeah, I think it was SLG. So he was looking at this SLG now, and he was looking at it eventually through, I believe it was, maybe it was like 85. And he's like, the REITs are strong. I'm like, yeah, REITs have been strong, but you're looking at the worst REIT. You're looking at a REIT name that has not reclaimed its pre-pandemic drop. I see the flag or the base, but everyone in here is kind of screwed in this name. And anyone who bought this thing at 100, right, everyone here is a seller. So sector strong, buy the strongest REIT. This thing is near blue sky breakout. I can buy 360 versus 340, risk 5% in the strongest name on the board, or I could, whatever the hell it was, SL, or I can buy 84 versus 80, risk the same 5% in a much shittier chart. And that, like, for the cheaper names, it's like, not saying it's a shittier chart, it's like your actual risk versus your actual reward is not going to be there. Like, this is like the buying the SPY option or buying the XLV option. It's like you're better in those names where you can get the tighter risk. But anyways, my real point of this was this day here, like, you bought it, you didn't get stopped through any of this. This is when you really have to be adding. You have to be adding this position, because now you know for a fact, like, wherever your stop was, it did not stop you out. It put in this pivot. It's now turning back up through your price. You really need to be kind of like adding and like doubling down here versus whatever that relevant low is, or whatever your stop that held is. And like, even for me with CIVI, what I did do well was that I bought this day. I was too early. I was initially giving it verse 52. And as it pulled in for these 2 days and it turned back up, well, now I can raise my stop, but I'm raising it after the day that I add. So I bought this day and I'm adding this day. And the day that I'm adding, that's now when I'm moving the stop up. And I don't want to lose you on this. So entry too early, initial stop is verse 52. Pulls in, does not stop me out, turns back up, back to my price.
Time to add.
Now it's time to add. And now I don't need to give it verse 52 or 51. Now this is this little pivot. If I'm now adding back above my price and it's going to turn back down, I'm definitely wrong, no matter what. So I'd rather just get out sooner. and the real trigger is 60, I'm going to continue to add again through the proper trigger. I'm going to add again through 60, and I'm going to get much heavier into that trade, knowing now this is really now my spot. And if it wants to break out, cool. And again, if it doesn't want to continue, I'm leaving the party break even. And that's like with this VECO, you had a great entry, you had that pull in, didn't stop you out. This is the time that you can get much more heavy versus whatever this out is, or versus your stop. And then you trade it, you can kick, then all this is still fine. But that's where you're going to really double up this trade. Even though the percentage is going to be the same, your dollar reward is going to be much greater.
Right.
There's much more probability it's going to work in your favor, because now again, you're seeing, it's coming, like just following that trend, like it's coming back higher. Just like when names are coming, like they're rolling over, like that H pattern. If you're drawing out that H, the pattern just resolves lower. If you're drawing like that U, it eventually wants to push higher, and you were able to hold through that pulling, and that's the spot to really add. And the rest of that you did great. It's even impressive that you held this name for that long, but it made sense because this same thing
just consolidated.
And then this was again another spot where, as long as this took, and maybe you got out there. Oh, you did it perfectly because you added this day, right?
Yeah.
Yeah. So this is like that entry there is like perfect, and that's the same thing you want to do right here. Like that was the day. This same entry that you got out, and then you added back to it. That was exactly the same spot. And then you took the profits. You got out break even, textbook. And I'm not going to say, buy it back this day. Like that's getting too fucking crazy. But this was a good trade. But this could have been like a really, really good one with just that little spot right there. It doesn't.
Yeah, I like that.
And that's not going to come around that often. Even like CIBI is one of the few that I can think of lately, even on my end, where it's like I got in early, it held versus my actual stop was, and it gave me the opportunity to really add heavily through a much tighter risk. Again, I did a great job on the buying side. I did a very poor job on the taking profit side, because again, this thing went fucking 10%.
Right.
I didn't take money off it that day. It was just kind of foolish, but that's my own mistake. So let's see.
Nice. I like that.
All right, we went over XLM. Let's see. I actually never saw any options on here. I wonder if it shows you the chart. Oh, okay, so you bought it this day, one contract. Okay, yeah, no, it's not as cool as I thought it was gonna look. So
what is that? Oh, is that when?
I guess it shows you bought one contract, 93 cents, strike 1200, sold the contract at 720, whatever the next day.
I remember that.
So let's see. So you made $600. Yeah, I mean, that's fucking. The crazy thing is,
Tesla's an exception. It's its own animal.
Yeah. The fucked up thing was, if you actually probably held this to here, you probably wouldn't even have made as much money.
No, I wouldn't have. It expired probably a day or two after that sell candle.
That's the part of me where it's like, that's why I just hate options, because it's like, you're buying a call, you're expecting it to trade higher than it does, and then it's like you still make less money. And that's the part where it's like one extra layer of complication that it's hard for people to truly grasp, that keeps so many people hooked into doing it when it's really going to end in a positive result. And that's where I get around people say the market's a casino, because I'm like, no, it's not. I do it this way and whatever. But when I see something like that, it's like I can understand that thought, because it's like in my head it makes no sense that you're expecting it to trade higher, it does, and then it's worth less because
you get crushed. Right?
Yeah, it's just that's the part for me where I'm like,
when was that? October 25th. I think so I bought an out of the money. I always buy out of the monies because they just have more. And I remember this. Remember, it was, I think Tesla had just released something along the lines of something like the amount of cars that they were going to be putting out, or I mean, it's just it's its own animal.
Yeah.
It's like very, very rare exception, I feel like. Yeah, cute out.
Completely agree. All right, so I went last one. So again, the good trades, they all, not much for me to do here, but you got in, next day it goes, you take profits into the up move, you still hold some. I would imagine you probably had it versus kind of like break even or your original stop because you're gonna get shaken out into this. And then, you gave yourself the opportunity to make money. You got out again. All of this, all makes sense. And you can say, okay, this is another one of those days to add, but this isn't really as defined of a spot as like the other trade where like it actually kind of pulled in and turned back up. This is kind of
Give
what
you a pivot.
you can kind of get yourself in trouble where it's like now every day when it's near your price, you're buying to it. Like that's not really what we want to do here because this one, it obviously worked, but there'll be plenty of others that it has that day and the next day it fails. So again, I think you traded this one very well. I think we have like some pretty concrete, simple things to focus on for the
Yeah,
month.
definitely.
It's no more kind of SPY or major sector or cheap stock options. Just kind of nix those.
Yeah.
Trading wise, if the name works in your favor, tightening up that risk, break even, lower day, tightening up the downside, and the winners, they're going to take care of themselves. Other than that, I think VECL where it did pull in and it turned back up, that's the spot to definitely add much heavier because you're not anticipating the stop or the pivot. You now know where it is and it's coming back to your price where it's more likely should continue higher. And that could be a spot to turn like that good trade into like a really great trade. And then
Awesome.
On the selling side, it seems like your range percentage wise is 5% loss to a 10% gain. I know there's a few kind of 20% ones. Some people say 5 to 20%, but now it's trying to tighten up the losers from 5% losses max to 2 to 3%. And then as you start to get some of these bigger winners where you're up 8, 9, 10%, trying to keep even one share back to break even to be involved if it wants to continue 20% or 30% higher. And then you can start to expand the upside of where you're realistically taking profits in some of those bigger trades.
Awesome.
All right,
I'm really happy I did this, Ben.
Yeah.
Thank you.
And again, I typically do this at the end of each month, just so it's like there's enough things to go over. So we kind of covered all of April and like going into now end of May, we'd have those things to go over. And then as we scroll through this, it's like we should start to see as the months progress, these percentages, again, those losses tighten up, the gains get bigger. And every new month, there's going to be something new to focus on. And it's never like we just get to a point where we're good. It's like, there's always
always learning, right?
Unfortunately,
but
I mean, that's the fun. If it was easy, it wouldn't be,
Right. I still love it.
Yeah. So, I mean, it was good talking to you. You have good rest
You
of
too,
the
man.
weekend.
Appreciate everything. Thank you.
Yeah. Once I'm gonna upload this now, then once it's uploaded, I'll send you the link so you can watch it if you want to.
Yeah, no, definitely. And then as far as like to do this again, I would just schedule something like on your schedule.
Mm-hmm. And I'll send you the link too. You can even schedule them out like months in advance. So it's just like kind of end of month whenever it's convenient, and we'll do them.
All right, yeah. So maybe I'll aim for end of May or something then.
Yeah, sounds good.
All right, awesome.
All right, Chris, I'll talk to you soon, buddy. Be good.
All right, you too. Thank you.